I mean, I think overall, obviously, there was some nerves at the start of last week and into the weekend. But overall, when you look at where we've settled, it's kind of a market reset. You've seen a lot of the very stretched positioning washed out. You see an easier ability for the market to price some of the fundamentals. I think it's gotten closer to pricing some of that on the Fed. And now we get really 2 weeks of some fundamental data coming through, helping to reset that. So August is always a scary period. There's low liquidity. And when you get shocks, it's difficult for the market to price. But so far, I think it's kind of cleaned things out a little.
Where do you think we go from here? And do you think markets have seen the highs for the year, or can we rally through this?
I mean, I think risk sentiment's difficult because there's a bit of a Goldilocks pattern there, right? If we continue to see decelerating U.S. data but not pushing these sort of recessionary fears, well, the Fed's able to start easing. That leaves the markets feeling okay. That means you can get credit tightening, you can get equities rallying, and rates kind of with this mild rally as we go here. If the data were to deteriorate faster than that, now you're in a situation where the Fed can't keep up. The Fed behind the curve becomes the narrative, and that's where risk sentiment gets stretched. So I think it really does come down to what happens, the scare over payrolls, the pullback in the ISM manufacturing. Those are probably set up to rebound, I think, when we get to the data next month, but the markets are going to be jittery until then.
Okay, so we are now basically a data-dependent market, very much in line with the US Federal Reserve as well, saying it's looking at those upcoming numbers as well. Just with regards to what we saw in the market last week, one of the things that you and your team have been looking at is the fact that we saw basically rates and FX vol being a little more subdued than equity vol. Can you help me understand why we saw that?
I think some of it comes down to when you went into this, it was a very one-sided trade on the equity market. Everything was almost no volatility, straight up. You didn't have anything really shaking it. Whereas obviously you had these stresses on the Fed and whether they're behind the curve or the head of the curve. I think a lot of that helped to already leave the market relatively balanced on the rate side in a way we weren't on FX. We know those carry trades that were sitting there meant pulling back some of the tech stocks, some of the other sort of high-yielding risky assets. So I think that naturally fed into that. If we were to see a more persistent move in equity volatility, I do think you'd have rates vol catch up. But so far, I think those anchors on FX and rates vol are probably going to pull equities down. And between the two, it's probably FX vol that's still priced too low. That's the one as the carry trades unwind, as dollar strength comes in, that's probably the one we would pick as still too low right now.
I thought it was fascinating as well. I looked over a research note from B of A this morning that says the carry trade is basically complete now. Do you think there's a further unwind to come?
I think it's I push back on a lot of those narratives. You don't have any real data to price your carry trades, that we know. A lot of the market, or a lot of the areas that are saying the carry trade is out, is just looking at the returns that investors have. It doesn't tell you that those assets have been taken out of the market, that those positions aren't there. It just means the returns you thought you had have been washed out. If you think they're washed out and you're going to continue to see that move forward, you're going to leave those positions in. So I'd be very hesitant to say the carry trade is over. I think there's still a lot that can unwind, especially as you look at how undervalued yen is. That is going to change the valuations for the next 1 to 2 years to come. That's going to have spillover effects.